There's a banking crisis, there's no question about that, but it's not what most people think. Let me explain in this video. My name's Nigel Green, I'm the CEO of deVere. I'm going to give you a clear explanation of what's been happening in the markets. First of all, let's be clear what's happened with Credit Suisse and what's happened with Silicon Valley Bank and indeed Signature Bank. We've seen a situation where banks have made bad decisions. So whilst you see in the press lots of different reasons for what's happened, if you look at the real situation and get to the core issue, it's a loss in faith, it's a loss in trust of banks. In other words, you look at Silicon Valley Bank as a quick example. They invested in government bonds at exactly the wrong time. Most people perceive wrongly that government bonds are low risk. They're not low risk if you buy government bonds in a market where interest rates are rising. In other words, if you're buying government bonds as they did for a 10-year period with low interest rates and interest rates rise, the bonds that you hold in become worth less. Okay, then we look at what's happened with Credit Suisse. You had a rogue trader last year who lost 2 billion. They actually wiped out more profits on bad trades than they'd made in the previous 10 years. So we're looking at a situation whereby people say, is there more bad trades? We look at we look at the Signature Bank, and again, bad decisions were made. So let's just go to the core issue. It's bad decisions, bad investment decisions done by banks. That's caused a loss of trust. When you get a loss of trust, then people withdraw their money. Banks rely on the fact that people are depositing, and if they're depositing, that money is then used to lend to other people in long-term loans, and sometimes they invest in long-term solutions. If people then withdraw their money, their assets are not liquid. We have a liquidity problem that has now been solved. So what's happened? Well, first of all, UBS has come in and they've actually bought Credit Suisse for what certainly seems to be a bargain price. They're swapping their shares at one UBS share to 22.48 Credit Suisse shares. That means Credit Suisse shareholders have got a downgrade on the price of their shares, but they're now owning UBS. UBS has now purchased for 3 billion, just over 3 billion, a bank that has assets that are worth more than that. Its property alone is worth nearly 1 billion based on its last accounts. So you've got a bank that's purchased something where the assets are there, but the liquidity isn't there. Okay, of course, UBS now have the issue, and the issue of trying to integrate, which can be expensive. But the Swiss government have said they will cover the costs, and they'll also provide 100 billion in liquidity. Same time, you've seen Japan, you've seen America, you've seen the UK, you've seen Europe, and all central banks say they will add liquidity to the market. This isn't 2008. This is more like 1907. And you say, wow, can you go back that far? Well, if you look at the markets, then exactly the same situation happened where there was a loss in trust. JP Morgan actually came in and they bailed out banks that were failing. And of course, then governments added liquidity to the market, and the markets actually did 100% that year. You can Google it to check it. So we've now got liquidity in the market. Some people say, well, that causes inflation. Well, you've got banks have added liquidity, but they don't spend it. They've got that money there. They can write off bad debt, puts banks in a great situation to build strength. Is there more regulation needed? Well, every time there's a crisis, more regulation comes in. Okay, we always have to say, or at least my personal opinion is, regulators can only regulate what's happened in the past. In other words, there's been an issue, so they regulate to stop that happening again, but something else different can happen. So in other words, the world's always going to have issues at some stage. So right now, we're seeing they're going to solve this particular problem. Is there going to be a problem in 10 years' time? Maybe, because they can only regulate on things that have happened in the past. But right now, what you've got is liquidity added to the market. These means these banks across the world are actually in a really great position to be able to make money. And I would suggest you in 12 months' time, you're going to get people complaining that banks have made too much money. 4% is the interest rate that is the sweet spot for the banks. In other words, if there's 4% interest, that's the best rate where they can maximize their profits. We're about now, banks are actually in a good situation. So it's not a situation situation where you should be saying, are they insolvent? It's actually a situation whereby, are they illiquid? And now governments have backed it. Okay, the system should, over the next week, settle down, okay, and actually be in a very good position. So if you're investing money, where should you be investing? Well, now expect inflation to be dampened. Okay, what does that mean? Well, because people have been worried about it, then you'll see less spending. Okay, so in fact, the Fed shouldn't have to raise interest rates quite as much as expected. So expect a 0.25% rise rather than a 0.5% rise. Expect inflation to be dampened and actually expect the economy to be in a good situation. So whilst the headlines may show you one thing, okay, actually when you look at it and you get the detail, you'll see something else. Okay, however, there has been some things in here which perhaps will upset people. For example, shareholders don't get a vote. The Swiss government forced the sale through. Well, that's unprecedented, and again, that will cause some nervousness in people buying shares. Okay, can a government just force something through? Well, yes, it appears they can by changing the laws of the country. Okay, also at the same time, you'll see that AT1 debt, so this is a debt that's used by banks to raise cash, it's more risky. Okay, you'll see that it's been written off. Okay, again, this is unusual, and it means that people will be less likely to invest into those particular type of bonds. Yes, it's all changed. Always talk to a financial advisor, but right now I'm seeing there's actually opportunities in the market. The crisis is not exactly what's described. It's actually liquidity. It's now been provided. My personal opinion is actually there's opportunities, but you definitely need to talk to an advisor, and 100% always diversify your investments to make sure you get the best possible returns over the medium period. In other words, you can go for speculation, small investments, or you can diversify. Diversification is always better. You might not always get the higher returns of just going for a few shares, but actually over the long period of time, you're more secure and you're going to make more money. Thanks for watching. Please like and share the video.